guys, thank you all for joining us today. I'm going to go ahead and mute everybody just for the moment so we cut down the background noise, and we'll just leave our speakers unmuted right this second. Actually, I'm going to unmute everyone, and then speakers, if you could just unmute yourselves. So just click on the unmute button so that you guys are able to talk. That way we'll cut down the background noise. So how's everybody doing this morning? We got you're still muted. You're still muted. All right, Ryan's unmuted. Dusty is unmuted. And where's Heather?
I'm unmuted.
And Heather's good. Okay, perfect. So thank you all for joining us today for our daily Zoom call.
Oh, where'd the audio go?
You muted yourself.
You're muted. Yes.
Okay. So every day we've had different mega agents on here sharing what they've been doing in their business and what they're doing to stay focused, help their clients. And I thought it'd be interesting because we're getting a lot of questions at the office around, well, what else is happening with mortgages? What do I need to tell my buyers with mortgages? What do I need to work on to make sure my closings are happening on time? Can we still get insurance policies written, all that sort of stuff. So I figured who better to hear that from than our vendor partners. So we've got three amazing people with us today. We've got Dusty from Bank of England. We've got Ryan from Dunlap Moran. And then, of course, we've got Heather from Goosehead Insurance. So we've got about a half hour to go through this morning. What I figured we'd do is just hear from each of them for a few minutes around some hot topics and things that you guys need to be aware of. And then we would open it up for about 5 minutes of Q&A with each of our vendors. So why don't we start off, ladies first, why don't we start off with Heather? Can you just tell us a little bit about what you're seeing out there in the insurance world, and what are some things that our agents need to be particularly aware of and communicating with you around when it comes to their deals?
Okay, so a lot of things on our end haven't really changed, which is a good thing. But what has changed is the time that it takes everything to go through underwriting. So all of our carriers are working from home. So if you have an underwriting issue, or if you need something that we need to ask a carrier, that's going to take a lot more time now because we have to call. And usually we used to be able to call, get it taken care of, done. Now we leave messages, they call us back, we send emails, they call us back. So it's a very long process now. So our best recommendation is, as soon as you accept an offer, get your insurance started right then and there. Even if you have to get your inspections done a little bit later and you can get those to us, at least we can get the ball rolling on our end and you're not waiting for us. But besides that, they haven't closed anything or stopped anything. It's just very slow, and we'd rather take that than them shutting everything down.
So what does the timeline look like now compared to what it would have, 3-4 weeks ago?
Now underwriting used to take 24 hours, or used to take 24 hours. Now it takes about 2 to 3 days.
Okay, so not a huge shift, just maybe an extra, 3-4 days to be safe, to keep your clients kind of on target for the timelines that we're working with.
Yes, but we get a lot of realtors that will give us their information for their client the day before they're closing or 2 days before they're closing, which I don't know how that's possible with a loan. But that really gets us in a pickle now, because you're going to be waiting on us, and we don't want anyone to ever wait on us.
Okay. So guys, let's do you guys have any questions for insurance? It sounds like insurance may not be as heavily impacted, but I'm sure that you guys still have buyers out there that have had questions or wanting some to hear some good things. So do you guys have any questions for Heather you want to ask on the call? We've got about 40-50 people on here, so it'd be a great time to hear from you all.
Kieran, it's Ann. She brought something up in our meeting yesterday that I hadn't thought about, that a lot of people right now are looking at their homes and trying to trim away the fat, just like we are in our business. Heather, can you talk a little bit more about what you can do to help?
Okay, like I said in the Zoom meeting yesterday, is if you have a client that's going in a short sale or trying to bail out because they need to save money, we can reshop their insurance and save them some money. We have over 75 carriers. Just this week alone, we've saved people $2,200. We saved a guy $1,600. So it's over a year, but any money right now is going to help people because they're in a predicament where they're not getting an income. We are very blessed that we're still out here trying to get an income, but some people are just shut off. So if they need a way to just get to where they can purchase the house or get where they can put the house for sale, we can help them get there by saving them a little money right now.
That's awesome. You know what I love about that is, as a realtor, right? I said this on one of our calls earlier in the week. Yes, our job is to sell houses. Yes, our job is to list houses. But really, what we do is we connect people. Okay, we're the piece of the community where you know the mortgage guy, you know the attorney, you know the insurance person, you know the lawn care person, the pool guy. You're the person who can connect your clients to all of these individuals that they need to have in their life in order to, get the services they need. So what would it look like if you're doing these care calls to your database every day, like we've been talking about on probably half these calls? Hey, I'm just checking in, wanted to see how things are going with you and the family, blah, 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 right? You're not asking them for business. You're not asking them to list their house. You're not asking them to sell, to buy a house. You're just checking in with them because you care about them. They're a past client. What if you could say, hey, I've been talking to some of my vendor partners and I've put together some ideas because I know everybody's in a crunch right now. I put together some ideas of some ways that I think I could help you save some money month to month. That has nothing to do with you buying or selling a house from me, right? It's not about you. It's about you giving back to them. So, how powerful would that be if you could connect them with somebody that could help them save $100, $200 a month when things are kind of uncertain? So I love that.
Absolutely.
All right, Heather, get ready for a whole bunch of phone calls.
Hey, we're ready. We're both of us.
Thank you so much. So let's move on to Ryan. We chatted a little bit the other day around some things that are going on with title. So why don't you just spend a few minutes recapping what all's happening in your world, and then I'm sure we'll have some questions from the agents.
Sure. Can everybody hear me?
Yep.
Okay. Yeah, so the hot topics now that Kira and I had talked about really are how do we get closings done, and what do the contracts say? The how do we get closings done part is a challenge because this has historically been a business of personal engagements, meeting with clients. As everybody knows, to get a closing done, there's a wealth of documents that are involved, whether it's a financed or cash deal. We also are a state that's blessed with a lot of folks that either move here from out of state or buy second homes here, so they're not even here for the closings. Well, so we've got a bunch of documents that need to be signed, many of which need to be notarized, many of which need to be witnessed by other parties. And then we also have folks that end up signing out of state where there may be stay-at-home orders and things like that. So the thing we're navigating through now is how do we get these documents signed? Are we having people come into the office? What if they're sick? What if they've been in contact with people? What if they don't want to come in and meet with us? Will they meet with a mobile notary? Are mobile notaries available? Are they available in the state where they're signing, or are they on a lockdown order? And then the big issue is how do we embrace technology to cover this? Firms like ours and our competitors, we're doing e-recording, which has been available for quite some time, where you actually get the documents signed and then you record them electronically. That's no big deal. That's been around. The new thing, of course, that started January 1st, effective in Florida, but it's becoming the norm in many states, is e-notarization of documents. That's been legal since January 1. That took effect January 1, but frankly, nobody was doing it because everybody was kind of like, well, it's cumbersome. There's a lot of rules involved. We'll get to it. Let's let somebody else figure it out, and then we'll catch up later. Well, that later is now. So we're all scrambling to try to be out in front of that and figure out who's doing what they call RON, remote online notarization, what companies are doing it, what the fees are, how does it work. Ourselves, we've done some test runs with some vendors. There's a particular vendor that we're using where things worked out pretty well, as well as you could expect. But the challenges with e-notarization are it doesn't solve the problem. If we're a state that goes on lockdown, if people can't physically meet a notary to have those documents signed, the closing doesn't occur. So you turn to things like e-notarization. Well, the problem with e-notarization is you have to have a webcam, which we're finding out many people don't have. And frankly, and Dusty can talk about this a little bit, the lenders thus far, to my knowledge, some are allowing that, some aren't. There's different rules that apply. So my understanding is that's loosening up. I think it has to. I think there's a lot of conversations going on. Again, I'm sure Dusty can give more information on that. But right, as of right now, if a seller doesn't have a webcam, they can't notarize the deed, they can't witness the deed. Somehow, those documents have to be physically signed, notarized, witnessed, etc. We got to figure it out. Go to Plan B, go to Plan C, go to Plan D.
So Ryan, with the webcam
Yep.
issue, real quick, just interrupt for a second.
Sure.
Does the e platform have to be done through a certain video platform, or could you do it through any face-to-face video conference like we're doing now?
Well,
Because every cell phone has a webcam.
right, and yes, that my understanding in the test runs that we've done, the signers are not able to do it through an iPhone or a smartphone because of what they have to do. There's certain, they have a lot of documents that they have to sign. They have to do driver's license and verification. There's a series of 5 questions that have to be answered that you get 2 chances at, and you have to answer 80% of them correct, or the closing gets delayed 48 hours. And I did the questions, and I was like getting answered. One of the questions was, what was the number of the address I lived in Orlando 20 years ago? I mean, how the hell do I know that? So luckily, I got the other 4 questions right, and I got the 80%. But the physical signing process through the portal or whatever it is that they present, you can't really do that on a phone. Now, the witnesses can be on phones because they're just witnessing, and they click a couple buttons and that's it. But the actual person signing that mortgage package or that seller package or whatever it might be, what we're hearing from the companies is, yeah, you really can't do that on an iPhone. You have to do it on a webcam, laptop, whatever. So I don't know if that turns into, hey, part of our closing process. Do you have a webcam? No. Amazon Prime yourself a webcam. They're like 20. We were looking them up yesterday. They're like $20. I mean, just get yourself a webcam. Everybody's got to pitch in and figure out how to get this done.
Well, it also might be a
again-
way for our agents to support their clients, right? Most of our agents have a laptop with a webcam on them. So I understand that some clients may not want to go to a busy law firm or come downtown.
Right.
Doesn't mean our agent couldn't offer, hey, why don't I come out to your kitchen table? We'll sit 6 feet apart. I'll set my laptop up for you.
We thought about that too. Absolutely. Yeah. We turn to the realtors and say, are you comfortable going to these houses? What if they're not feeling well? Blah, blah, blah. So yeah, there's other options there. But I think the biggest thing, which I'd love to get Dusty's take on, is when and if the lenders will loosen up, because even if they allow the remote online notarization to occur, even if they allow that, historically, the promissory note has to be wet signed. That's the document that says I owe this money. Now that document doesn't get notarized, but most of the time that has to be wet signed. So let's say every document can be e-notarized and e-signed with the exception of the promissory note. Well, that's great, but what if they're in a state where there is, if it gets to the point where there's no FedExes or you can't drive to a FedEx drop box to return that original note? There's just all kinds of things that we're rolling with here. So right now we're just trying to stay on top of it and come up with different ideas to get it done, and just rolling with the punches. And so that's that issue. Then the other hot topic is, of course, the contracts. What do the contracts say? The hot topic there is force majeure. Existing contracts that started prior to all this really going down, that's about the only argument you have if you're prevented from closing. You have to make some type of force majeure argument. I don't want to get into all the details, and there's all kinds of debates on that. And so there's all kinds of new language that's coming out. Florida Association of Realtors obviously circulated an addendum. There's flaws in everything that I've seen. Our firm has its own types of language. Different law firms have their types of language. I saw the Coldwell Banker one the other day, which went on for 2 straight pages, which I thought was way overcomplicated. I believe the flaw in the Florida Association of Realtors addendum is that it doesn't account for new contracts. That addendum is an extension. If you look at it, it's basically an extension of the inspection, the closing. So that's accounting for contracts that are already in place. I think it's important to have language built into the contract from the time it's executed going forward, not just dealing with the ones that are in place, extending, but having some type of contingency for your buyers, some type of extension that kicked in under certain circumstances from the get-go, from the time the contract is executed. We're still getting contracts in. Obviously, it's slow. The pace is slowed. But I have yet to see a contract come in the last 2 weeks that has anything written into it about COVID-19. So I'm trying to circulate language that we think is good to as many people as we can to say, look, you really need to consider bringing this into the fray, because if your cash buyer, if their liquidity goes through the basement and they can't fund because they don't have the funds to do so, your buyer's not protected. That deposit might be gone. You could see people suing for specific performance. We have sellers calling us asking about that, which they usually don't do. Sellers usually just go for the deposit. But I think sellers are so freaked out that they may not be able to sell their property that they're looking at other options like, do I actually sue my buyer for specific performance? So all of that's going on right now. So I think the advice there is to try to make sure to include something in the contracts from now as they're executed going forward, as opposed to just relying on that extension addendum and hoping that the seller agrees. Because at the end of the day, if they don't agree, they don't agree. That addendum is a mutual agreement to extend. It doesn't, there's no requirement that anybody sign that.
Okay. And just in the interest of time, and I want to give the guys an opportunity to ask you some questions. There was one other thing we talked about that if you can just in 30 seconds or less, we talked about scheduling your closings.
Right.
Because I think like Heather talked about, we're starting to see a little bit of lag time. I'm sure that's true for mortgage. I'm sure that's true for title. So I know the typical approach for many realtors is we're going to schedule for the last day of the month, save $60 on taxes because that makes it worthwhile, right? So what I would recommend, and I talked to Ryan about this the other day, is when your buyer and seller are able to close that transaction, that is when you schedule the closing. Don't wait till the 30th. If they can close on the 12th, get it scheduled for the 12th, because we don't know what other delays are going to start to happen. We don't know what other things are going to happen, and things can happen very quickly right now. So get that stuff scheduled as soon as they are able to perform the closing. Don't just throw in the extra week. Oh, we're going to put it at the end of the month like we do so often.
And I would just add to that, just let sure whoever you close with, whoever your closing agent is, know that, hey, because a lot of times people will say on or before and they'll pick a closing date. And, they just assume that the closing agent is reading that to mean we may want to close tomorrow. A lot, I would say easily 50% of the contracts that come in say on or before. So that designation alone is not going to trigger the closing agent to think like we are rushing to the closing line. Let them know you're rushing to the closing line. Let them know, hey, I know the closing date is April 20th, but if we can close tomorrow, we need to close tomorrow. So can you please rush everything?
Right.
Even if there's additional, rush fees or whatever, let them know. Don't just assume they're relying on the fact that it says on or before. Let them know in the cover email when you send the contract over, hey, look, you'll see a closing date that says April 20th, but really we are looking to, it's cash. We're looking to close ASAP. Please do whatever you can to rush everything that you need to order.
That's a great tip. Thank you. So let's open it up, guys. We've got, 40 something, 50 people on this call. I know you have attorney and title questions. So let's just spend a few minutes with those because I don't want to cut into Dusty's time. So what do you guys have for Ryan?
So Ryan, what type of clause are you looking for us to put in the contracts? Can you give us any wording whatsoever?
Yeah, I mean, we have some, if I'm working with a buyer and they're paying cash, the reality is that they can fund that transaction. There's nothing in the contract that says, hey, if your bank account has been depleted, you have an out. And really the force majeure as it exists now is what everybody's talking about. And really what that boils down to, it's more complicated than this, but basically what it boils down to is it says, if there's essential services that are not available that prevent performance, like insurance is incapable of being bound, utilities are not running, etc. Then what happens is there's an extension of the closing date. It's not an automatic out for the buyer. It's simply an extension of the closing date up to 30 days. And if at 30 days or any time between then and 30 days, you're still prevented from performing, after 30 days, if that prevention is still there, either party can cancel and the buyer gets his or her deposit back. That's what the contract says now. Then you get in the whole debate over whether this is truly an act of God and blah, 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 whether it actually is a force majeure. That's what the contract says now. So especially when you're a cash buyer, you need to bring in some language that applies specifically to COVID-19. And the language that we've drafted is basically to say, things like and we've expanded on what applies if there's any of these events that apply, or we've also brought in some economic hardship language that says if the buyer, due to sort of collateral damage from COVID-19, financial hardship, financially is unable to close, then the buyer is protected. Now, that's the language that I would always recommend a buyer bring in initially to present to the seller as part of an offer. The seller doesn't have to agree to it; they can balk at it, and then hopefully, the two sides can come up with some language that is mutually agreeable to give the buyer some protection should, they just be prevented from performing, not just because utilities are not available, but because of other reasons. Again, maybe economic. On the lending side, it's a little different. On the lending side, if COVID-19 prevents the ability to fund, prevents the ability to get a loan approval, that's the other thing. If the language we've sort of prepared is to say if you have loan approval, but the world has changed dramatically where the loan approval is now no longer there. We've had some clients that actually have had loan approval, and the loan approval has been withdrawn because their debt to income ratio is off or whatever based on what's going on. We present that language in a finance scenario to say, look, the buyer shouldn't be punished for that. If that happens, look, nobody saw this coming. They should be able to protect their deposit and get that back. The contract as it exists now doesn't say that, okay? Again, all you have is that force majeure thing, which says prevention from performance based on the inability of or the unavailability of those essential services. That's it. So it is key to have some specific language in there.
So can I just add one thing? Let me just add one thing. So guys, I think what Ryan's saying is really important, and I want you guys to understand that as a brokerage, we don't want 180 agents running around adding their own language to contracts. So if you feel there's a need to do so, you need to pick up the phone and call Greg. You need to reach out to your attorney or title person. I know Ryan helps a lot of our agents. His email is rfeatherstone@dunlapmoran.com. So I know he'd be happy to work with you guys, with your clients. But let's utilize our relationships with the people that have the knowledge around this. I don't want to see contracts coming through with all kinds of, language that you guys are pulling out of the internet or whatever. Let's leverage our relationships and our experts on that.
Hey, Kieran, I got a question for Ryan.
Yeah.
Ryan, can you hear me?
Yeah.
All right. So let's say like what we saw in the non-QM sector in the last 7 days, that most of them have either halted business or went out of business. Is that a situation in which you think it would apply?
So non-QM for everybody is non-qualified mortgages.
So your bank statement loans, the credit deficiency type people, yeah. Right? The non-Fannie, Freddie, FHA, VA stuff. That sector is pretty much dried up in the last 7 days. There's just no liquidity in the mortgage-backed security market for it. So we're seeing big names that otherwise were completely, were in great shape 8 days ago, cannot fund a loan, even ones that they have in process as of right now today. So with that language in the contract you were just speaking of, do you think that would hold?
The contract that exists now, the force majeure language, the unaltered force majeure language, probably not. The only provision in there that says that that could apply is it says I think it's something like essential approvals are not available. So you could argue that loan approval was an essential approval. But if it's possible to get a different loan and still fund the transaction, the seller might have an argument to say, well, you know what, if that particular loan isn't available and there's other loans available that you can go get, you need to do so. Now, the seller would have to be flexible and give some time for the buyer to switch gears to a different loan. But no, bank liquidity issues, buyer liquidity issues, those are not outs. Those are not automatic reasons for any type of extension under the existing force majeure. So again, I do think that language needs to be brought in now specifically for this issue. Go ahead.
You would hope that in today's market, in today's world, I mean, has it changed in the last 14 days, that a seller would be a lot more apt to negotiate a contract extension based on the, the current situation that we're in versus they would have been before,
Sure.
right? Because they have to go find a new buyer. So, we haven't seen too many of those, but I mean, it was definitely, because when markets change, they change quick, especially in our world. And like I said, I mean, lenders that were funding loans 7 days ago are not funding loans today.
So
And that's,
let's do this real quick, guys. Just I don't want to interrupt, but I have to for just a minute. So I want to ask everybody's permission. Can we run about 5 minutes over or so? Because I do want to get to Dusty, because I know he's got a lot of awesome information. I've been talking to him the last couple of days. All right, thank you. I see a lot of thumbs up. So again, Ryan is an awesome resource. I know there's a ton of questions around this stuff. Art Featherstone at dunlapmoran.com. Shoot him an email. He is the best when it comes to this sort of stuff. So let's switch over to Dusty. Dusty, give me 2-3 minutes on, well, like you said, things move fast in the market. You sent me a great video last night that I don't know who that guy was, but he's some mortgage guy somewhere. and he really explained what's happening in the markets really, really well when it comes to mortgage and all the things that are happening. Maybe you could post that up on Facebook, on our Facebook group today. People could take a look at that. It's about 12 minutes or so. But it was really good information, and I definitely walked away learning some things. And look, you guys need to position yourselves as the experts in our industry, right? Not just the realtor experts. What's happening with mortgage? What's happening with title? What's happening with insurance? That's why we're doing this call. So, Dusty, maybe give me a quick recap of some of the high points of where the mortgage market is at, and then I know we're going to have a lot of questions. So let's just do that.
Yeah. So right now, Bank of England, we're working 100% remotely. It's something that we've never done before. Frankly, I thought it'd be more of a challenge than what it was, but we kind of made some jokes that even to try to do this 10 years ago would have probably taken weeks to transition everybody. But we right now have underwriters, processors, closers, assistants, et cetera, working from their homes. It really only took 2 or 3 days to get that transitioned over. And what I told my team is that, and I'll tell you guys the same, we're in a little bit of a unique situation from other lenders because we control operations right here in Southwest Florida. So we're not dependent on a hub in Iowa that's servicing 3 or 4 other states. And then when you have situations like this where there's high volume going on with refis, and we're already in a high volume purchase market, whose loans get treated first. So we haven't seen any slowdowns in actual operations. I mean, what I'm talking about here is processing, underwriting, closing. What we're going to see, not only us, but in the industry, is we're going to continue to see a slowdown in appraisals, right? People don't want to let people into their house. Appraisers are backed up because of, rates dropped and everybody wants to refinance their house. And so those are some of the issues that we're seeing right now. People are getting laid off, people on furlough. So we've just recently got some guidance from Fannie and Freddie and from HUD 2 days ago on how we're going to treat VOEs. Before you close a loan, you call up the employer and you say, hey, do they still have a job? Well, what if they're all working from their house? You can't call up the employer. So there's been some guidance that's been put out that we're following that's going to make that a little bit easier. We're utilizing pay stubs, emails, et cetera, things that we otherwise would have never allowed. But desperate times in this stuff call for desperate measures, and so we have to make changes. What Ryan was talking about earlier with the e-closings is what we're allowing a hybrid e-close, which some could argue, and I get it, that doesn't really make much of a difference. Basically, the note, the mortgage, and the CD still has to be wet signed, but everything else could be e-signed. So it is less documents. It would speed up the process a little bit. But like Ryan said, it's not a perfect solution. So I've been working with our closing manager and our closing department, and more importantly, our investors in the back end to figure out, what they're going to allow and what they're not going to allow. The issue is, law comes out and, like he said, January 1st, and says it's okay to do it, but we still have to abide by what the investors say. And when I say we, I'm talking about the industry, and that's why you're not seeing as of right this second. I would say in the next week or two, you're going to see this open up a lot, especially as more states get shut down. I was talking to a counterpart in Kentucky, and they're on a statewide shutdown, but the governor allowed mortgage professionals to be deemed as essential business. And the challenge with that is, okay, well, if you're going to do mortgage professionals, are you going to do the realtors? Are you going to do the home inspectors? Are you going to do the title companies? Because it takes all of us to pull a transaction together.
So in Florida, just so we're clear, real estate and title, I'm not sure about insurance. I imagine they would be also, are essential businesses. So, we're going to be able to continue to service our clients. The title companies, as I understand, and I assume this goes for law firms that do real estate law, are considered part of the financial sector, so they would be considered essential businesses.
Right.
So we'll be able to continue to function and take care of our clients.
And to that point, we have not had one contract get canceled due to any of this.
Yeah.
Obviously, we've seen a slowdown, but we haven't seen one contract. Obviously, we've also seen some buyers that otherwise were getting told to go pound salt a week ago because they wanted a $500 repair done. Well, now that seller's calling them back saying we'll do a $5,000 repair,
Right.
and give you a $10,000 closing cost credit. So, back to the question I was asking Ryan earlier about is what we're seeing, with some of this non-QM stuff, that the market's tightened up so quick to where we're literally emailing, investment reps in the morning and saying, hey, are you going to be good? Are you going to fund what you have in your pipeline at least? And the answer, of course, is yes, yes, yes. And then that afternoon, like basically, the equivalent of a cease and desist, and it happened that quick. And so, that video that I shared with you that I'll put up on Facebook, the next sector that we're going to see, I don't know that it'll be to that extreme, but it's definitely going to tighten is any GSE loans. So basically government loans, FHA or VA loans. And the issue with that is that they're higher risk in general, right? And in general, on FHA loan, you have higher LTVs, you have lower credit scores, you got higher debt to income ratios, and servicers don't want those on their books going into a potential economic downturn. The difference between a GSE service loan and a conventional service loan is the fact that if the consumer were to default and not make the payment, the servicer has to continue to make the payment. And then you have a liquidity issue within servicing, and nobody wants that. So what you're going to see is higher LTV restrictions, DTI restrictions, credit score restrictions, and I wouldn't be surprised if that carries over into the conventional side as well. So those loans that we were doing at 50% DTIs, maybe we're going to be at 45 or 40 until things level out.
So
Unfortunately,
can I add something real quick?
Yeah.
So again, guys, we need to be looking for how we're going to use this information to service our clients, right? I don't want the message to be that, oh no, nobody's going to be able to get a mortgage. That's not what we're saying. We need to be aware of what requirements are going to be in place so that we can educate our clients, right? Because before, we could get somebody a mortgage if we needed to, pretty much, right?
Right.
So now it's going to be in a position where, well, like, tell me what does your credit card debt look like? What, do you have an auto loan? So ask them those questions so that you can prepare them for where they're going to need to be positioned to get this mortgage. They may still want to buy the house and move forward. They just may need to tweak some things.
There's a lot of great options on the conventional side. And honestly, and I didn't mean to scare anybody with everything I just said, but less than 2% of our business was non-QM loans last year. And 78% of our business year to date has been conventional financing. Some of those that went FHA otherwise probably they would have fit the box for conventional. I mean, we still have great programs with Home Ready and Home Possible that are out there. They might not be just as lenient as FHA, so maybe it takes a little bit more planning. But I guess it just goes back to saying a constant communication with your lender, whoever it is, if it's somebody local, if it's a big, a big box store, and hopefully their leadership and their management is being transparent with them on changes that are coming down the pipe. O'Day and I have said from the beginning when this happened, we went through 2007, 2008, we've been together 15 years, 16 years, it'll be in November, and a lot of the same team. And what we've always said is we're going to be transparent, and that's not just within our team, but within our real estate partners and our referral partners and our customers as well. I mean, we would never want to be one of those guys that, in the morning's telling you everything's okay, and then in the afternoon tells you it's not.
So let's switch to some questions. Let's do 3-4 minutes of questions from the group. And guys, I know with this panel, we could have probably done an hour-long call this morning and not gotten through everything. So please reach out to them individually. All of our partners are committed to helping you move our clients forward, just like we're committed to sending them the business so they can do so. So let's have some questions for Dusty around mortgage. Anybody got anything?
I do have a question. Joanne Owens wanted me to ask that mortgage apps are down across the country. Are you guys seeing that in our area as well?
Yeah. So purchase loans, which makes sense, right?
Right.
Most people, if you were on the fence, you're probably going to wait until see what happens. Like I said, we are seeing some deals that otherwise buyers couldn't find properties, and we've had such an inventory issue. But now we're going to probably see that loosen up. The other thing, you have to watch out for with lenders right now is capacity, because rates dropped a couple weeks ago to the lowest level we've ever seen ever. So everybody wants to refinance their house. There's only so much capacity. There's different estimates out there, but some say that, there's $7 or $8 trillion worth of loans that could be refinanced right now. Last year, the industry had a record year. We only did 2 trillion. So do that math. That's 3 times more volume than what we did when I say we as an industry did in a record year. So a lot of lenders have already shut down refinancing, meaning they're just not taking applications. Others, to mitigate risk when some of those other issues I talked about, are raising rates. We've always been a purchase-based lender. 97% of every deal that we did last year was a purchase-based, was a purchase loan. We always joke, like if we do a refi, it's for somebody's, aunt or uncle or cousin. We have seen some customers that are calling us, and checking in on that. And we'll take those in. But like I said earlier, we control operations here in Southwest Florida a lot more uniquely than some of the other, especially big box stores can do that. But in general, yes, turn times are going to get backed up. I could easily see with the big box guys, 60, 90, 120-day turn times. We're already seeing it. They're already there right now. They're posted. You can go out to their websites and look.
So what about you guys? Since you are a little bit more, nimble in your operations, I know you can't give us a number, but if you were running 30 days before, where are you guys projecting for the next couple months on turning around it? Somebody puts in an application, debt to income's good, credit score's good, conventional loan, what are we looking at?
So nothing has changed. Like I said, the slowdown that I foresee for us specifically is appraisal turn times. And that goes back, I'm not blaming it on the coronavirus. I'm blaming it on the fact that everybody wants to refinance their house and they all need an appraisal. Right. We are seeing some more appraisal waivers from Fannie and Freddie that we otherwise weren't seeing, and that's a good thing. They're also talking about allowing us to do some more drive-bys. But again, these things take time to implement. You can't just, they don't just throw out guidelines and then, they're in place in real life within days. I mean, they take weeks typically sometimes.
Right. Who else has a question? Kim, you had said that Dusty and his team have been helping you guys out. Do you have a question or a comment or anything?
No questions or comments.
All right.
Thank you.
Anybody else on the call who's got buyers out there that are concerned or have questions that you'd like to get answers to?
Carolyn does.
Yeah.
So we're seeing buyers being a little bit nervous, of course, to go ahead and put their liquid into down payment and then have this not knowing where the market is going and what they're going to be actually purchasing. So from your side, from the lending side, what are some positive conversations that we can be having with our buyers to make them feel okay that this situation is a good one still?
Well, I would assume, I don't know, you all are out there in the trenches every day, but I would assume the contracts that are being written today are a lot more advantageous than the contracts that were being written 2 weeks ago. So I think it just takes confidence from all of us. We all got to have a place to live. I think when all this goes away, Southwest Florida is one of those protected little places. I feel like in this country that we have a lot more room for growth. We've got great weather. We've got a great tax haven. I think we've always been one to rebound, faster than other areas. During the last downturn, if you look at a chart on the growth that we've had compared to other areas, we're always tracking above average. And I think if you just reiterate that with them, that once this goes away, you're getting a better deal now than what you would have. And when this goes away, that, the property values here, I would argue will come back faster than they would in most parts of the country.
Sure.
Great, thank you.
So does anybody have any other questions? I know we're running super late today, but it's because we've had some great content and conversation. So does anyone else have a question before we wrap up?
If no one has a question, I do want to add something.
Sure.
Okay. One of the things I want to add is if your closing date moves closer or farther away than the original date, don't cancel your insurance, just change the date. It's really easy to do. Second of all, I notice a lot of changes aren't happening. Like they're not doing a lot of the 4-point issues. If you have a Zinco or a Challenger or anything like that, don't worry. Don't let that kill the deal. We have insurance carriers and that will cover those. So that's one of the big things that we've seen a couple people back out of the deal because they won't repair that. And that's okay. We can ensure that. We have over 75 carriers. So don't let that kill the deal.
Okay. And I do see Erica, you have your hand raised. Go ahead and ask your question and then we'll wrap up. You need to unmute yourself.
Yes. So you had talked about having language in place to protect the buyers, right? So what about on the flip side, protecting our sellers? So for example, we have a contract that just recently fell apart. They're putting a lot of pressure on us to sign the release and cancellation. So basically, this had a financial contingency, contingent on a conventional loan product, right? And somewhere along the way, they decided to seek an alternative product because I guess they didn't get approved for the conventional loan. And this is all unbeknownst to us up until basically the last minute. And when Patrick had a conversation with the lender to get further clarification, she said that they didn't get approved for a bank statement only loan, which is not what was according to the executed contract, right? So I guess my question is, as far as implementing language to protect not just the buyers but also our sellers, how would that play out in this particular scenario? Any advice on that?
Brian, you want to take a swing at that? I mean, what I would say is I think that that's already in there. I mean, it's either marked conventional, FHA, government, or other. That should have been marked other.
It was, but they're not giving us a formal a formal loan denial letter.
Well, if you don't mind, I'll jump in there. Yeah. When all this came about, did the loan approval period, had that expired, the general 30-day window?
No, they were still within that period.
Okay, so they don't, the language of the new contracts states that as long as before loan approval period deadline expires, if they don't have to be denied for a loan, they don't have to provide a written loan denial from a lender. They have to use diligent effort to get the loan, and you're absolutely right. It has to be the loan that they put in the contract. If they mark conventional, if they said set a interest rate limit, etc., they can't say that and then go apply for a different loan and get denied for that different loan and say, well, I was denied for a different loan, therefore I'm exercising my right to cancel. It has to be the loan that they contracted with the seller to say, this is the loan I'm going to apply for. There's actually a case law on that, and I wrote a blog about it. It's on our website. So there's that issue. But if they were applying for the loan that they said they would apply for, and they didn't get loan approval, they don't have to be denied for the loan. If they didn't get loan approval by the loan approval deadline, after utilizing diligent effort and all of that, and they would have to prove that they did, so they can't just sit on their hands, hey, send us this, send us that. They don't respond to the lender at the 30th day. They say, well, I didn't get loan approval. They have to actually, use diligent effort. But by that deadline, if they provide written notice to you that they were not able to get loan approval, not necessarily that they were denied, just didn't get loan approval, and that written notice can be a text message, an email, whatever, then they say, hey, I didn't get loan approval, I'm canceling the contract, they have the right to do so. If they didn't do that, if they didn't provide you that written notice that says, I didn't get loan approval and I'm exercising my right to cancel before that 30th day, then a 3-day window opens right after that in favor of the seller to cancel. So it's very fact dependent, on what happened here. So the question to you is did they send a notice in that 30 days that says, hey, you know what, we didn't get loan approval and we're canceling?
They did. I have to revisit to see exactly what it states on there, but they did, to answer your question, yes. So what you're saying is, regardless if there's a change in loan product, as long as they provide written notice within that contingency period, then they have a right to their deposit back.
As long as that loan product, even if it was changed, matches what they put in the contract. Now,
but it doesn't. That's the thing.
Well, that was my question earlier, and you said it did. So if it doesn't match what's in the contract, then there's actually a case on that says no, that you can't say I'm going to go get a 30-year fixed loan conventional and then go apply for a bank statement loan, get denied for the bank statement loan, or not get approved for the bank statement loan and say, hey, sorry, I didn't get loan approval, I'm exercising my right to cancel. That loan that they applied for has to match what is said in that contract. Because the seller is signing that contract, that's a material term. I mean, if a buyer puts an offer and says, "Hey, I'm gonna apply for 100% financing at 1% interest interest only payable over the next 50 years, that loan doesn't exist. Obviously, a seller's never going to sign that contract. So that's an essential term. I want to know what kind of loan you're applying for, buyer. That's why I'm signing this contract. You can't then just unilaterally go apply for something completely different.
So this sounds like a situation, Erica, you probably want to partner with Greg or Joanne on, or Ryan, or your title rep, and
Yeah.
get some
And
advice on
Patrick
that.
is
So
in
let's take-
communication with Greg now on
Yeah.
that.
So
Thank
let's
you very
take that
much
one
for,
offline. It's good information.
for
and
your
you should
input.
definitely reach out to someone and check on that.
Okay.
So listen, thank you so much to all of our partners, Dusty, Ryan, Heather, you guys are amazing. Please reach out to these folks if you guys have any follow-up questions, or reach out to Heather if you're looking to get some of your clients saving some money on their insurance. Tomorrow we have Laura Rode on our call. She's going to be sharing a lot of great information around what her and her team are doing. They are going gangbusters right now, guys. Despite everything that's going on, they're taking listings over Zoom. They're closing buyers over, they're doing a great job of implementing all the things we've been talking about. And Laura's excited to share a lot of that with you. So 8:30 tomorrow morning with Laura Rode. We'll see you all there, and have a great day. Thank you so much to everyone that was on the call today.
See you guys. Thanks.
Bye.
Thank you. Bye-bye.